Rates hold, real estate softens, BC construction feels the squeeze. If you run a small or mid-sized business in British Columbia, last week delivered a message you can't ignore. The Bank of Canada held rates, but warned it's watching energy prices like a hawk. Today we'll talk about what that means for you, borrowing costs, what's happening in real estate, and the real state of development and construction in BC. Welcome to the KeyBusinessConnect Weekly Business Brief, the show that filters the noise and gives BC and Canadian business owners the facts that actually affect margins, cash flow, and next quarter decisions. I'm Ken McLean, and this is the Week in Review from March 14th to March 20th, 2026. Everything we cover today comes from public and verifiable sources, the Bank of Canada, Statistics Canada, and the National Housing Data, etc. All right, let's start with the headlines. The biggest event last week, the Bank of Canada held its policy rate at 2.25% on March the 18th. But the real headline wasn't the hold, it was the warning. The bank flagged the risk that higher energy prices tied to the Middle East situation would push inflation higher. And it said clearly it would raise rates if needed to prevent energy-driven inflation from becoming persistent. Now, what does that mean if you're a small or medium-sized business in BC? Here are three practical takeaways. 1. If you're carrying variable rate debt, lines of credit, floating loans, this isn't an all clear. It's more like don't count your rate cuts before they hatch. 2. If you're renewing financing this year, lenders will be listening closely to this tone, not only as rates, but on covenants, risk reviews, and how they price uncertainty. And 3. If your business depends on fuel, shipping, freight, or energy-heavy inputs, volatility can move from the oil market straight into your cost structure. So yes, rates didn't move, but expectations did. And that brings us to the broader Canada-wide business pulse. What the numbers say about spending and construction. Here are a few quick hints from the national data releases last week. Retail trade. Statistics Canada released the January retail numbers, and e-commerce remains meaningful, around 6.2% of the total retail, with an e-commerce sales reported at $4.4 billion, which is up 1.5%. Construction investment also from stats in building construction fell 1.9% in January. Residential was down more sharply, while non-residential was modestly up. Building permits at the same time, the value of building permits rose 4.8% in January, led by non-residential. So the picture is mixed. Consumer spending is still moving, residential construction momentum looks softer, and commercial or institutional activity may be steadier. Now let's zoom in on real estate, because in BC it's not just a homeowner issue. It touches the trades, renovations, lending, and consumer confidence. In real estate last week, Canada-wide real estate activity softened again. The CREA, the Canadian Real Estate Association, reported MLS home sales down 1.3% month over month in February. At the same time, the CMHC, the Canadian Mortgage and Housing Corporation, reported housing starts edged up to about 250,900 on a seasonally adjusted annual rate in February. So you've got a split signal. Resales easing, but starts still moving. Here's the practical small business lens. If you're in trades, renovations, landscaping, home services, spring can still be strong, but customers will shop harder, delay non-urgent work, and negotiate more. If you're in mortgage, real estate, services, or lending or insurance, the Bank of Canada's tone matters. Energy risk can keep fixed rate pricing cautious, even when sales cool. And if you sell into the new build supply chains, starts matter more than headlines. Watch permits, pre-sales, and financing conditions. All right, now for the big one, BC development construction. This is where confidence and feasibility either keep projects alive or quietly kill them. The state of development and construction in BC right now can be summed up in two words: confidence and feasibility. Even when demand exists, projects don't start unless the numbers pencil. And right now, three pressures are showing up again and again. First, financing and pre-sale risk. When resale markets soften and lenders get cautious, projects that only work at peak pricing can pause. Second, cost volatility, especially energy-linked costs. Fuel touches everything: trucking, deliveries, heavy equipment, and material transport. When energy spikes, the chain reaction is real. Freight up, materials up, bids become riskier, owners hesitate, timelines slip. Third, mixed signals in the pipeline. We saw residential investment down nationally, but permit values are up, led by non-residential. That suggests parts of the commercial and institutional pipeline may hold up better than condo-heavy segments. So what can BC contractors and suppliers do this week to protect margins and cash flow? Three tactical moves. 1. Add a materials escalation clause for quotes that extend beyond 30 days. Make it standard, calm, consistent, negotiable. 2. Shorten price holds. If you're holding pricing for 60 to 90 days, you're absorbing the market's volatility. 3, firm lead times in writing. If your schedule depends on one critical SKU, get the lead time and price valid until dates in writing and reflect that reality in the contract, because in 2026, your margin is inventory. Treat it that way. Here's a weekly action checklist. 3 quick moves to do this week. Takes you maybe 15 minutes. 1, borrowers. Call your lender and ask, what covenants are the most sensitive right now, and what happens if our costs rise for 60 days? 2, real estate adjacent businesses. Track whether spring demand is bouncing or drifting. Don't plan off headlines, plan off your leads. 3, construction business. Update your quote language. Shorten price holds and confirm lead times. Protect your margin before it gets negotiated away. That's your Key Business Connect weekly business brief for March 14th to 20th, 2026. If you want this tailored to your industry, trades, professional services, manufacturing, retail, we can shape the weekly brief around the pressures you feel first. Visit KeyBusinessConnect.com for the newsletter version, resources, and a member networking. And if this helped, subscribe, share it with one BC business owner, and we'll see you next week.